So if you're asking why the market is going up after inflation came in higher than what is expected, trust me, we're all asking the same thing because it makes absolute zero sense. No question about it. So here's everything that you need to know about today's CPI data report. So overall NASDAQ market QQQ, which is the NASDAQ 1-for-1 ETF, is up 1%. Is it because the NASDAQ market is relatively a little bit more on the oversold side that it's finding any reason to go up because it's so incredibly bullish? Possibly, right? But with that being said, overall inflation came in at 3.2% before seasonal adjustment. Core CPI came in at 3.8%. So expectation for the overall market was 3.1%. That was the forecast. We came in at 3.2%. We came in higher than what is expected. Look at this. We came from 9.1% all the way down, and we've kind of been consolidating here, and we've seen some higher and some lower months. Inflation is not going down. But when you read this article, this is so funny because it says stocks are rising after hotter than expected CPI data report. And it says that analysts at Bespoke Investment Group note that stock futures turned higher likely because inflation was lower if you exclude food, energy, and shelter costs. Okay, so now we're removing things to make it look better than what it is. What? So we'll see how the shakeout happens as the market digests the data. The report's not good, but the market is so incredibly bullish and market sentiment has been so incredibly bullish that, like we said in today's live, market will find any reason to try to go up. But guess what? The last thing that they included, and I know that they made sure that they wanted to include this, is that the biggest thing to keep in mind is that even if hotter data pushes out the timeable rate for rate cuts, the Fed still isn't hiking. So that's one thing to take into consideration, is that the Federal Reserve had no expectation to increase interest rates in 2024. So all this really does is, because inflation is coming in higher than what is expected, it's probably just going to prolong the time that the Federal Reserve is going to actually implement a rate cut. So when they meet this month for their FOMC meeting, which we will be live streaming on the channel, just another reason to subscribe, we can't be surprised that, oh no, they're not going to cut rates again. What's going on? Why aren't they going to cut rates? Well, because inflation data doesn't support it, and it's literally that simple. So the market can try to do whatever it wants to do. The Federal Reserve has said this. Jerome Powell has said this himself. The market gets ahead of itself many, many times. And I'm a big believer that, again, there's no reason to overcomplicate it. If you want to trade with the market, then all power to you. Market is still incredibly bullish, but understand what the data is saying. Inflation is not going away, and that this is only going to prolong the time that the Federal Reserve is going to cut interest rates, meaning that the market wants the Federal Reserve to cut interest rates. But as long as economic data continues to show that inflation is not going down as expected, then the Federal Reserve has no reason to cut it. Now, again, it's not that they're going to be raising interest rates, but they have no reason to cut it. So again, if you want to check out the CPI data report to review it yourself, it is available for free at bls.gov/CPI, just like I shared with you guys all yesterday. And then you click on the PDF, and it's very simple to read. 3.2% before seasonal adjustment, 3.8% for all items excluding food and energy, which is considered to be core CPI. We added 0.4% in the month of February and removed the old month of February of 2023. And you guys can see here that core CPI did essentially go down month over month, but overall CPI did end up going up from 3.1 to 3.2%. The biggest increase that we saw was on gasoline, all types, and the biggest decrease that we saw were on new vehicles and on medical care services that saw a decrease of 0.1%. So just wanted to make sure that I kept you guys up to date with the overall market. And I hope that this makes it a little bit easier to understand what exactly is going on. Market sentiment is incredibly bullish. It's finding any reason to try to go up. I think it's greed. You guys can let me know down in the comment section what you think. But inflation report was not good. It wasn't horrible, but it definitely was not good. 3.2%. with expectations of 3.1%. You guys let me know down in the comments section what you're planning to do, but I want to give the market a little bit more time to see if it's actually going to try to recover or if this is a fake out and then going to lead to some selling pressure because this report did come in worse than what is expected. I'll see you guys on the next one. If you want to tune on into my live trading session tomorrow, click that second link in the description down below, and I'll see you at market open, especially if you want a 50% off discount. Like always, let's make sure that we end the year on a green note. Take care, team.